Hey guys, welcome back to another video. In this video, I'll be going over the notion of giving your trade idea or setup another chance. Essentially, what this means is that you have taken a trade and this trade on its first attempt has failed and hit your stop loss. And now you are looking to take another trade. So let's see how we can take advantage of giving our trade setups another chance. I think this video will be extremely helpful to those of you that end up overtrading and blowing up accounts. So make sure to watch to the very end. Just before we begin, as always, make sure to subscribe, give this video a like, follow me on Instagram, and join my free Discord if you haven't already. Link is in the description below. Since the intro is now out of the way, let's get straight into it. For this example, we need to dive into some theory. So let's go over some theory. Here is the much needed theory we need to go over. So as we can see, price is in a downtrend. It's moving down, it's breaking structure to the downside, and it's showing us it wants to go down. For some reason, we have a POI here, and we want price to sell off from this area. We come up, we come down, we create a higher low, we make a higher high, and then price breaks the higher low. And that's telling us, oh, we could have a reversal on our hands. So as price comes up to this area here, we look to take a short trade. Now what happens? Price doesn't go to the downside. Instead, it pulls to the upside and comes into this second POI we have marked out. For those wondering, POI means point of interest or area of interest sort of thing. And prices come into this POI. Now we're thinking, okay, and a lot of people in the moment or in the spur of the moment when they've taken that loss from attempt one, they are 100% thinking of, okay, if this area didn't work, let me short from this area. Now that is the wrong thing to think about, okay? That's the wrong type of mentality. That's what's going to cause you to overtrade and end up blowing up your account. What you have to think about now is, okay, so my confluences for this trade were we came into a POI, we formed structure, we broke structure, which gave us an indication that we are moving to the downside, but then price violated this trade idea. So now at the moment, we have no confirmations that price is moving to the downside. So shorting from this area is blind. It's almost a gamble. So what do we do instead? So we wait for confirmation. When it comes to attempt two, we have to be extra careful with the confirmations we take. And essentially, price actually makes it a lot easier for us to take this trade. And that's only because if price wants to move to the downside, it will print a confirmation for you to take a trade. If it doesn't want to move to the downside, then it won't. And instead, it will just continue up and you won't enter the second attempt because it didn't give you what you wanted. So as you can see, we have the same thing we looked for in attempt one over here with attempt two, but in this case, it worked out. So essentially, when you're giving your trade a second chance, you're looking for a second opportunity for price to create a confirmation. But price has to create that confirmation once it's reacted from the area you were looking to take the second opportunity from. Now that we've gone over an in-depth theoretical example, let's go over a practical example. So this is a trade that I've actually taken very recently. So with this trade idea, this is what happened. Price came into a POI, and as we can see, it pulls away, creates a low point, and then creates a higher high. So as soon as this happened, I marked out this low point over here. I'll have to draw a small arrow because I won't be able to show you it properly. And then price pulls up and then breaks the high. So I actually took a trade, I think it was at this point here, from here to here. No, just clearing the high. So 5.4, about 5.9. So that was my trade. And I was looking to target this area here plus a runner to continue going down. So it wasn't a bad risk to reward, 1 to 3.4. My expectation was price should continue to the downside. Now, as we can see, this doesn't happen. So let me just remove this for now. And what we see is price reacts from this area again, pulls down, and now creates another breaker structure. So in terms of what I'm saying, giving your trade a second opportunity, we can see we actually have a new breaker structure. So that makes our trade viable, our second trade viable. It also means we can take a trade. So obviously looking at this leg here, we can see we have an order block around here. So what I did was I marked out this order block. So let me just mark it out, pull it to the right. And I was happy to take a trade at this point with my stops just above this high. So that was 4.5 to about 5 pips. And as we can see, this trade worked out, I think, pretty well for me. This was a news event, so I did end up closing it around here, I think, around there. So it ended up giving me a 1 to, so I closed it here. And as you can see, I was able to get a 1 to 2.62 trade out of it. Now, as we also can see, is after the news event, we had a bullish movement and then price continued to the downside, which shows that my trade idea was correct. Price was to continue to the downside, but the only thing that affected this trade was a news event. So as I was editing this video, I had my eye on EURUSD, which I took a trade on this morning and I did not send it out to you guys for a reason, because of the news that was going to come out today. But let's go over the trade that I'm talking about. So I was looking at this structure here, and I know price is to move to the downside, right? So it fits in terms of my system that I trade every morning, and we have this low here that I want to get broken. Price pulls up, pulls down, pulls up again, doesn't break this high, but does create a low, and this low gets taken out as well. So we get 2 breaks of structure. This is the proper one, and this one is a weak break of structure because this is a weak low. Now price moves up, and I actually took an entry at this point over here. As you can see, that entry got taken out, and I actually took a loss today. Now I did reduce my lot size and my risk on this trade because of the USD fundamental impact that FOMC will have later today. So I'm not too worried by it. Plus, yesterday I had a winning trade of around 6R, so I'm happy with what I've done for the week so far. However, what I noticed was later on, we started to get structure printed nicely. So we get this high put in, then we make a low, but it doesn't break this low, and this is the low I'm focusing on at the moment. So if I draw an arrow and pull it to the right, as you can see, it gets kept in place until it gets broken at this point here. And when it gets broken, we can see we get a couple candle closes below it, and then price pulls up. So this is where I was looking at a potential entry, because price has tried to push up for so long, from around 7 AM to around, let's say, 11:30, and now we're coming into pre-New York time. So what I did was I looked into this area here, and I know there's going to be some sort of supply zone for me to sell from. So dropping in, I looked, and there is a supply zone very discreetly tucked away here, and as you can see, price does tap into it very nicely, literally pinpoint. And I'll zoom into it so you guys can see, super pinpoint. And an entry would have been nice around here. Obviously, taking into consideration spread, you would have your entry just a bit lower than this. Now, this isn't a trade I took because I was a bit busy editing this video and doing some other stuff, but it is a valid entry that anyone could have taken. And as you can see, from this position, let's say we took it and we took the loss on the first attempt, we would look at currently holding, or let's say we target this low, for example, a nice 1 to 10R. Absolutely beautiful trade. There you go. There's another example of why giving your trade a second chance makes sense. Sometimes price moves erratically or irrationally, and you are bound to get losses from trades like this where they don't work out in your favor. But staying persistent, looking for those confirmations, and making sure that each trade entry you take has confluences behind them, and you're not carrying confluences over from your first entry opportunity to your second entry opportunity, and not carrying a bias when you're taking trades, allows you to take great trades using the second chance method. So I just thought I'd share this with you because it's very interesting. A lot of people give a trade one chance and then they move on, and then they come back to the trade and find out that that trade worked out very well. So I thought I'd show you that second chances do exist. You can use them and add them to your strategy. They work very well in most cases, as the first attempt ends up being like a fake out sort of thing, and the second attempt becomes the real move. Especially with the growing number of retail traders switching to SMC, you would expect some sort of manipulation to happen to cater for all of these new SMC style traders. Anyways, that's it for this video. Make sure to subscribe, give this video a like, follow me on Instagram, join my Discord if you haven't already, and I'll see you in the next video.